we'll talk about, that's actually a few ones that I want to talk about. Indices, of course, as always, because I'm trading it, but also Forex. There was a couple of things that we talked about at the beginning of last week on Sunday, mentioning there's potential to short depending on what Monday did. We'll recap that and how that structured throughout the week. And then even gold played out pretty well. I didn't trade it or track it. I know some people wanted me to start looking at it, but I'll quickly look at that one as well. I can't have the chat. Maybe I'm going to open the chat. T, do you know if I can open it on my phone to watch the chat on the side? Oh, you can? True. Yeah. Just because I can't go back and forth. Just in case there's, whenever there's questions. We'll screen this. Solid. There we go. All right, now we got the chat on the side. So yeah, last week, we'll go here just to give some perspective on this. Closing at all-time highs for both pairs, ES and NQ. Really at the highs. So when you're at that point, all you really have to work off of is previous week high. Previous day low would have been overextended for any relevant level. And you're really just focused around here. You know the market is going to open around that area. So you're just going to wait. And I was not trading Monday here, which I usually never do anyways, because I want to see some development. When you're at all-time highs, there's really nothing else to key off on. So I want to let price build up a little bit more context in the narrative. So an extra day is added narrative, and I compare that with the weekly range as well. You know, that matters to me. So I'm just going to let Monday go. And I know the way it traded here. And in all the rules of the approach, if you take out Monday, you could look at this day and understand previous week high is relevant. You can compare it to ES here, and you have a lower high. There's a divergence at the high here. So lower high where NQ makes a higher high. And it's pretty clean on the daily profile alignment as well. So if we go to the 7-hour ranged below previous week high, running that out, and then you can break that down to the right time frame alignments, and you have your reversal confirmation and continuation during New York. Pretty classic, but it's just because of wanting that added context. This can happen sometimes where it's just part of the rules, and I am letting that go and asking myself, is that providing me anything of interest for the following day? And for me, it does. And this thing with Monday, there's going to be times where this happens, and you can look back on it and say, why don't you trade every Monday now? It's just when we think about it on a larger sample size, and we don't want to overweigh the times where things work out, because it's very easy to pass over Mondays, weeks in a row where you have no trade and you feel nothing because that's what you're expected. But when something like this happens, you don't want to overweigh it and start changing what you really want to do. So this, I don't really bother with this. I'm going to move on to Tuesday. What did this tell me? And previous week high, there's obviously a protected high reversal signature that I can see. And then from there, I'm going to ask, is there an opposing draw, something that the market needs to trade into, another relevant swing? And I'm going to look here on the daily. I could see it, but hourly, even better. This is where the day closed. Look left. What are we looking at here? Run of a high. Failure swings off the low. Trading deep back into this low, but not quite through it. So I would look at this as the relevant draw for the market to trade into. Now, I'm using NQ as a draw, but when we go to ES, the framework, it closed weaker, and this gives me better framework in my opinion. So if I'm going to look back on the previous day, I'm bearish. I'm going to mark out or look in the previous day. It's an expansion candle. So the first thing I'm going to do is take 50%. That is the wrong fib, but we will go back to 50%. That is the level. And if I need to, I can refine it to the hourly, just like usual. You can go down to the hourly, look for opposing candles below that 50% point, because we know it doesn't want to trade up here, but I'm going to look if there's something I can refine it to, or a level if it trades into that below 50%, that I can use that as a relevant swing or relevant point where it should ideally respect and reject off of. So great, looks really nice. I'm going to draw out that level. This is what we highlighted before. I know it doesn't want to trade to that high because if it does, it's invalidated. And ES especially, it's the weaker pair here. So if that trades through the invalidation point, then it's absolutely both pairs are. So it's out of question. But here, this is what I'm highlighting, and I'm going to wait for how price develops around this. The only thing that would really keep me out of it is one, like I said before, if NQ and ES trade through that invalidation point, or if NQ just immediately drops into that draw where that's that relevant level. I would be concerned with that. I wouldn't want to keep trading the continuation. So I'm just going to wait for this to develop, and we can go here if we need to. We have that highlighted from before, so you know what that level is. I just pressed the wrong button. Cool. Okay. Previous day low, not too much of a concern here. A lot of people were asking on this day, previous day low, we have a divergence there. You know, what is that a concern? Can I flip the bias? And I mentioned this is not one where I would count previous day low as a massive concern because it's not the relevant swing in this context of the market. So we go to NQ. Yes, it is a high or low. It's potentially, I'm aware of this when I'm going to this day, but it's not swaying me off of my bias because we still have that low intact below. And I'm just looking for that as my draw. If it traded into that and then started going higher, of course, that is, like I mentioned before, the invalidation. And maybe I could flip the bias there, but it failed to. So now my focus stays on ES. Is it going to respect that up close candle on the hourly time frame? Here, it's trading into it. I know we don't have a reversal in this candle, so I'm looking for a run above that high, ideally. And then you're just looking for, you can go down to 15-minute, 5-minute. Either one works. And we can just continue to let that play out. And it doesn't close above, well, there it does, right? Here, this is where it really helps with not selling the reversal immediately. So you could have even, if you really needed to, you could have looked at this as a potential first close below and then potential continuation, but we're not selling that immediately. It doesn't offer it, and then the open comes through again. 15-minute looks the best here. Keep letting it go through. Failing, wouldn't sell that. Another high taken. Still respecting the framework. There's a close below. And then I'm thinking that is a potential first initial close. And then I can also use NQ. So I know NQ is a little bit stronger here. But at that point, when I compare these pairs, so at the open, I'm really more, when I'm thinking about which pair to enter on, I'm really more focused on the most recent price action. So when I go to NQ and I compare these two, it's pretty clear NQ is breaking down a little bit more aggressive than ES is here, but we have that initial reversal confirmation. It's still in respect. If I go up to the hourly here, if I draw this out, 50% of that nicely in respect to it, even hits off of it, which is fine. And the wick, I'm not all that concerned. Even through the body, it's not closing through it. So showing signs of wanting to trade lower. And eventually, as we let this play out, ES did make its move, but NQ, because it was weaker, I was looking at that continuation there instead. And then I'll mark out as well. Let's extend this a little bit more. Go to 5-minute. So you have the initial reversal, and even the 5-minute might show this a little bit better, but initial reversal confirmation. I know it's on the 15-minute as well, but you could draw it out in the 5, fine. This I wouldn't sell because that is a smaller candle body. I could potentially move to a 4-minute, but not fully necessary. This is a much clearer series, and when it's like this, so I have that close below in the continuation. This here, I could put my stop at this high. That's valid, but it's not really much different or much more risk if I just throw it here instead. This wasn't a divergence, so I'm more comfortable putting my stop there, but entering on that close through, I know my relevant objective is here. And I'm looking for that, but even more to get good risk to reward on this. And eventually it was a bit slow to deliver the move, but eventually respected that level and broke down into the close of the day. And then ES made a decent move as well, that you could have sold this. The pair selection doesn't really make a big difference here. You still have that reversal confirmation. You could have broken it down to a 5-minute if necessary. Even this 15-minute, if you stayed higher time frame and were conservative, you have your 2R trade. So not really much, not really a small room for error. You could have done a lot here and would have been fine on either pair. So it's just a bit slow in the delivery. And a day like that, I'm not going to cut myself off if I see the market starting to break down and still respecting the framework. So that's why I was still open to trading at that point in the day. And on that close, there, it didn't close through those lows. So that's the relevant low we highlighted as meaning something. If we go back to NQ, once we trade into that, our target, relevant lows, but it didn't close weak into that. So if Tuesday closed at the lows, I would have been a lot more inclined to find that invalidation point in that previous day and look for the continuation lower, just because it's not showing signs of wanting to run that out and then trade higher. But it did. If we look back into the close of that day here, that's probably going to be the open instead, but I already have my dividers. Close, wicking, so that run back into closing back above that low. That's pretty much a sign that it doesn't want to immediately do that. I can still be open to short, but the level that I would be focused on, if it's going to respect that, and I know there's CPI as well, so there's not much I'm really waiting for that context to build up anyways, so I'm going to wait for CPI regardless. This year, I can look on the other side of the market to see if there's an area of invalidation. It's a bit tough with this, so when you go on the daily, you can't necessarily draw out the full candle because it's not an expansion candle, so you wouldn't take the full range. You could potentially think about taking the wick, but in this situation, when there's not really a well-defined daily candle for either one of those to set an invalidation point, I'm just going to go down to the 4 hour or the 1 hour and try to find really clear opposing candles. And here I do like 4 hour on NQ. I would be looking at that. Same with ES as well. So you have these points to say, okay, the next day, the wick, I'm not going to use the daily candle because it's unclear, but I generally want to see the market stay in respect to that if I'm going to have any room to short. And let's see what CPI does. Does it support that idea? And pretty quickly, I think on both pairs, it immediately expands higher through that point. And there's just the short is not in question. And then you're thinking, is there enough for me to start putting along on this? We can look back on the daily profile, and it does have alignment with it. When we look to 7 hours, simplify this more. You have ranged, run at a low, and then expansion, not needing to return back to that low, and confirmed by that news release. So once news expands higher and validates shorts, you don't need it to return back to the lows. You're just thinking, is there room for me to put on a continuation entry and just using these opposing swings as targets? It doesn't need to return back to previous day low. It already ran out that and wicked it. It can stay in internal. The daily profile is aligned. It invalidated the up close candles, refining it on the hourly. So at this point, all you're thinking of, do I have a really well confirmed continuation signature? And for me here, admittedly, I wasn't very happy with how I approached the market on this day. I was a little bit more hesitant than I think it should have been. And that happens at times. And I can admit that for a day like this, where I probably should have been on side with this move. But there's a few reasons for that, where you have, in my opinion, there's two valid entries to this trade here. And for what I was looking for, they didn't exactly align. And what I'm looking at is, if we take back to NFP from this Friday, this is the kind of thing that I like to see is the news, okay, it expands higher. He doesn't need to return to the low. I'm thinking continuation. I don't like to immediately enter on that, especially if you get like a down close candle immediately closes through. I like to see it hold, and then 9:30, when I know it has room to keep going, using that driver to enter around there. This is like that exact signature, and why I take a trade like that pretty confidently. This here, while still valid, I was hesitant, which I don't think I should have been, but we have this first signature here that is valid. I do think we could pair that with some, I didn't use replay mode because it's going to keep doing this to me. Let me go back to that day. We'll do this. So if I go to ES and then NQ, small divergence there, but that closed through on a 5 minute. That is good enough. That is a valid entry in the continuation. Ideally, this is what I'm looking for, is the market not to expand immediately off of that. But then you get to 930, and this is where I believe the second valid entry would be. I can see the market forming down close candles, but the large wick, I want to refine that a little bit more. So I can go here. I would just go down the time frames 4 to 3. And let's see, 4 minute looks good. I could use that. 3 minute looks good. They're both valid, either if you're waiting for 4 or 3. And getting the close above. So that could have been the second valid entry because you're pairing it with the open. The only thing you really have to question, this is why I'm not a massive fan, or why I was still hesitant, is because the move is already starting, but you get that close above, and this day really made a nice move to the upside. So this is the second valid entry. So if you took this, completely fair on a day like this. So 1, 2, anything in here I would say is probably not ideal for an entry for what I would consider valid. And then you have previous day high, and an all-time high would be that next objective you would look for it to trade into. That is the ultimate area you would consider relevant on a target like this. There's nothing beyond that point. So once it got there, you're either, I would scale out, but also just trade management beyond that point if you were to still be holding a trade. We can just go out of this. So yeah, valid day, does what I want it, but unfortunately I was too hesitant, which I had to journal that down because not ideal. The following day, this is where we can, again, we're just reassessing the market fully. Here, I think ES is relevant here as well. So this is one of those situations where you have a divergence and you have to make the decision to assume if this is a divergence to trade lower, or if ES is weaker and it needs to use this as a draw. So that's why you're looking at the daily profile to assume one of those two things. And this day, I think there was one valid entry that I think was fair, and if you execute it, fine. And that's just how it goes sometimes. And I don't think there's anything wrong with it, and I wouldn't really double think it over much more. But the valid entry I would call for this day is based on the daily profile. When we go out, I believe it developed on ES if my memory is right. So you could, if you were looking at a continuation, which again I think is fair, this is one of those days where you're leaning a little bit more into the daily profile and seeing if it aligns with a higher time frame. So I could use this as a relevant level. And previous day high, I also do think matters here. So if price traded into previous day high, that would be a lot easier to operate around. But when it trades lower off of this, that's when you're almost immediately thinking, okay, we're probably looking to draw higher. And ES here, I was skipping over it, but 15 minute. We know that even if you go to this time frame, looking at the daily profile, here opening up, just making opposing run, but a shallow opposing run, still in respect to 50%. And you could look for an entry in New York. Right? No reversal taking place yet. You could look for, assuming that as an opposing run, looking at 930. And you're looking for that initial reversal confirmation to a continuation. Now, for me personally, and this is just a discretionary decision, or what I was mentioning more as a proper long in this situation, is either the news event at 8:30, we do have that, but even right at 9:30, when we've already done everything we needed, we're running out that low in New York, and we want it to be in respect to that. It was in respect to 50% on NQ. That's why I think a lot of people are still open to this. But I want to see that pretty much immediately turn price higher in a situation like this when I don't think the framework is as good. And that's just my personal decision-making brain speaking. And it failed to do that, especially with this close. That's what I would have been looking at 9:30, dropping lower again. Now, this is where we can speak about, I think, the only valid entry if you're looking at this. And I don't know if people took it on NQ or ES. I would probably assume NQ because it was stronger here. I'm going to make an assumption and say it was NQ, where you have reversal confirmation here, and then you can drop down to a 5 minute. And this here, that close, I think a couple people took that And again, I don't really have any issue with it. It's just small little decisions that here I wasn't all that confident in the framework. So that there, if you took that entry, yeah, I really have no issue. Just journal it and get on. So again, zooming back out, looking for the next day. Not much else to talk about there. This is where when I did the update in the morning, I wasn't able to get it out the night before, but it gapped up. It's a bit odd, but when the weekly profile isn't really giving us a direct direction, so I can't go into this day thinking I'm immediately looking short or I'm immediately looking long. That's where you want to draw out what relevant level you should be focused on. So what does the market do around here that would give me one, support from a higher time frame, but also give me good context of what's going on. And for that, highlighting Wednesday's high, that is what matters here, in my opinion. So looking at how price would trade around here, and I think right around New York, it was at that point. Now, I think a couple people, and this is what I mean with days like this, where I think the best thing to do when there isn't a defined bias, you could make a case for the upside, you can maybe make a case for the downside. Just focus on what you're seeing develop in the market. And these are the days where I would try to step away from the chat a little bit, because you don't want other people's opinions maybe swaying you to make different opinions, because you'll see in a day like this, some people took a long and they were right. And then some people waited for a short and they were also right. So you just want to be focused on that type of thing for a day like this. And you're basically waiting for a point to say, in my opinion, it's done this. It's developed in a way where that other side of the market is no longer in question. You're waiting for that aha moment, and that is what you're looking for. So I know some people traded this long, and for them that was looking at this here. So dropping lower, trading higher. And we can look at the open of this year. And again, we're looking at the relevant level. What is price doing around here? You can make a case that it failed to close below here at 930. So failing to confirm that move lower. Sure. 930 comes in. Now, if you were not focused on the 15-minute here, some people were looking at the 5. Failing to close below, pairing it with 930, starting to trade higher, and you're assuming it because it's not respecting this high immediately, that offered a continuation entry here paired with 930. Run of a short-term low, 930, close above. Some people took that. Great, you were right. Now, some people may have not seen that as an entry, and that's why, again, this matters to really focus on what you're seeing. The market, we can go over to ES. Maybe you're putting more focus here, and ES was actually much weaker, and it developed into a short opportunity, even on the daily time frame. Here, similar from before, it's making lower highs while ES is making lower highs while NQ is making higher highs, relative weakness. And if you let it develop to that point, you can maybe recognize a short opportunity here on ES, where you have, again, a divergence at the high, a reversal confirmation, and then looking for a continuation on that leg lower, especially when NQ starts to break down. And even if you were looking long on this, so these days it's all about process. You could have been looking at this here and looking for a continuation, maybe a close above here, even on a 5-minute. Again, you don't get the confirmation to long that. It's not there. So that would have kept you out. And then maybe you see the weakness come in, and that, again, maybe could validate your short bias. And I say maybe because it's all really up to your subjective opinion on this around that relevant level. So lower high, initial reversal confirmation. And I know a lot of people took this here. So reversal confirmation, weaker pair ES. Here, zooming back out to a relevant low. I'll look at previous day's low, but also this one as well. You could be targeting. Fell short, but I would also be looking there as well. And it offered a pretty solid trade opportunity there down to that low. So that's these days. Neither is really incorrect. You're just looking at development and asking yourself, is there enough to align with the trade opportunity there? So interesting days, but those are, and that's why I mentioned in the update as well, if you're not trading it, it's really good to track those days and just kind of look at it live and see how well you are following along with it, and could you have traded it, because that's a skill you'll want to build over time. I haven't been looking at the chat, so I don't think there's too much. Yeah, trading continuation. Yeah, so the Tuesday trade, the only reason that wick rule, I was almost using ES completely for the framework. So as long as ES was in respect to that hourly up close candle, I'm not really concerned with the wick because it's on the one that I'm framing it, it's fine. And then NQ did trade higher. And the only reason I'm taking NQ there is because, again, I have the framework on ES, but it's just trading weaker at that point. And that's just why I'm using it as a means for entry to potentially get more, but really focused on ES for the framework. Yeah, so again, no like defined time window to stop trading. If the market invalidates quickly, which it often does, where it'll be 9:30, 10 o'clock, the market invalidates an idea and you have nothing else to trade, then yeah, I'm ending it early. I'm not going to stick around for no reason. But if I see the market starting to break in my favor and I don't have to be fully watching the market every second, I'm just waiting for that reversal confirmation and then I can start being more attentive on watching. But even on that day for Tuesday, it started to it made it high at what 10 o'clock, which is I'm perfectly fine with that. So it did start to move in my favor early enough where I didn't really have much concern. The focus is always earlier in the day, so 8 o'clock to 11, just because based on data we know that's when the market really starts to move. But there will be times it breaks a little bit later, which happens. Was there an earning release the day before? Um, yeah, if you're asking about the gap, I actually am not completely sure when it gapped up. That I do not know. It does make it a bit odd when it gaps like that, but I do not know the reason. Friday, no, I was not involved in anything on Friday. I was a little bit busy. I had some life things to attend to, so I wasn't able to watch, but no, I was not involved. Say focus on using the wick rule on reversal days as the invalidation. Previous day equilibrium or find opposing candles. What do you say using? Yeah, I mean the wick it kind of applies for both, to be honest. So for reversal days, that's why it's kind of highlighted to focus on levels. A reversal day that's going to be most valid is when you open in close proximity to that relevant level you expect the market to reverse, because it doesn't have to make a large move away from the opening price to get there and make that reversal. So on reversal days, I'm focused on that. Continuation, it's either the previous day is a large wick and I'll frame it from there, or it's an expansion candle. And both of those invalidation points are for the purpose. It doesn't really have anything to do with those levels in particular. It's more about you want it to demand and respect a shallow run back into those areas. And that's really why we define them. Yeah, so the weekly, if it's doing anything like that, like three weeks in a row, um, is it 1 week? Yeah, so I don't really apply anything on the weekly time frame for myself. It's just not really doesn't offer me as much. It's not quick enough. I think the daily is almost a maximum for what I look at in price. Yeah, so the wick rule, I can probably define it specifically in the course, but it's almost like if you follow the process, you're doing it by nature. But the wick rule means on expansion day. So if you look at any real daily expansions, Wednesday, large expansion. Well, it didn't really run very far below the daily open. All these large range days, they don't make large opposing runs from the daily open. So bullish days make small, lower opposing wicks, and bearish days that expand make small opposing wicks on the upside. And that's a constant thing you'll see in every expansion candle. We're focused on trading expansion. So let's say I'm bullish and I see the market drop very far below the daily open. That is not favorable for me because I'm looking at an expansion. So, and the same thing goes bearish. If it deviates very high above the daily open before giving me an entry, well, that's going to be a red flag because I know expansion days, they don't have those large wicks. So it's basically you want to see shallow runs from the daily open to make a lower high. And if you just follow the process, you'll naturally do it. But that's kind of an explanation for it. When you say never let a 2R trade go break even, what if my first minimum objective is around 2R and it reverses right before reaching the objective back to my trailed stop before I get that partial? No, I mean, if it reaches, if it, my first minimum objective, if it reverses right before, yeah, I mean, that's, if you're already in 2R, like, if it's past 2R, I would just be scaling it, but it's an easy thing to say in hindsight. What you can do is if you know you're going to scale regardless, once price reaches there, you can jam your stop loss and you can be fine with it. Like that's something you can consider doing. It's not all that common if something in that extreme of a situation reaches right up to your objective and then turns on you. But that would just be a scenario where, yeah, if that does happen and you're trailing your stop loss and you didn't take any partials, well then yeah, you're going to get trailed out on it because you can't let your trade, it's the same thing. You can't let your trade go back on a break even when you're up that point. So there's always ways to mitigate that. Like it's always better if you really feel there's a need for it. It's always better to sell into strength and buy into weakness than trailing a stop that entire way. So it's better to be on that side than having it, reduce your win. If it's already at a point you feel good, then I would just scale it if that's something that happens to you that often. Yeah, overextended. If you're asking about the opposing run, that's where we use those rules where it's 50% of the previous day candle, 50% of the wick. That's when it goes beyond that point. That's when we consider it. That's why we call them invalidations. Is we consider it overextended at that point. Tuesday wasn't invalidated. So Tuesday was a day that I traded short. It held the framework. If you look at ES, let's see. Do you trade the silver bullet, or is that a strategy encompassed within the curriculum? I don't know specifically, to be honest. So I do focus on the continuation entry. So I don't know if that would fall under. I'm a little bit out of touch with that stuff at this point. So I'm not completely sure. But I do think in a way could say yes if you just consider it the continuation entry following the reversal. And honestly, both of our approaches are more focused on that anyways. Even before I was open to trading reversals, it was really rare that entering on the reversal was going to be in favor. So maybe yes to that question. Oh, if it's that, then no. If that's what it is, then I can confidently say no. I see some questions coming in, but while we're waiting, Euro, good framework on this. So this is one we briefly touched on last Sunday, where I mentioned you can pretty clearly see this developing into something that has potential. I look left. What is a relevant swing? This high is not relevant. Why? Because it is a failure swing to this high. So this is the relevant point that I think if the market runs this out, manipulates it, has a divergence there, that means something and can offer an opportunity. So that's why I'm drawing out this high here. And we can look at last Friday that offered, we break it down to an hourly or a 30-minute. Great. It has that confirmation already. Now, I don't have to immediately put on a short here. That's not what that means. It means I have a potential framework. And that's why letting Monday go, again, just normal protocol. Let's see if it remains in respect. And what does that tell me about what Tuesday should do? Great. I could use the wick. In respect. Monday itself forms its own reversal in Monday's candle because we have these up close candles. Tuesday has everything you need to look and sell this short. And that would be your framework. Looking at this trade here. Monday confirms that bias, the way it traded. Tuesday, this is already counting as a reversal. Price does not need to return to this high, so you can look at for it to respect these opposing candles. And I could go use you can use the daily wick. You can use this here to refine it. Either one works, doesn't make much of a difference. And you have an opposing draw. So when you're in this framework here, you're basically looking short biased until that's either invalidated or this objective is hit. And we can go out and this pretty much sold down to, and why is this the next relevant low? Again, this low here. I'm just keep looking left until I find failure swing to this low here. There's enough separation between these two, so I'm looking at this low as the relevant swing to draw into. It seems logical for a couple days. So first day, great. Second day, and then third day. And then 3 days of expansion, and you have that run. And again, this is actually a decent reversal day framework, in my opinion. It has a good narrative where 3 days of expansion, running out, opening near that relevant swing, so making that small wick, and that could be traded back to the upside. That looks great as well. So that's a good little weekly range play there that I did want to cover. And I think gold did as well. I think gold had a really nice, this is like ideal. Again, I don't really watch gold, but this is the thing. T called this out when he's watching it, where you have the weekly open, expansion, 3 days of expansion. You expect that, especially when you pair it, again, a relevant high. It's the highest high here. That means something when you run it out and you're pairing it with the idea that a continuation is unlikely. Pairing it with also we're opening near previous day high when that didn't reverse, so it makes a shallow opposing run. Great, makes that small wick and then expands in the other direction. And then Friday again, you can just mark out the entire daily range. 50% of that would act as an invalidation and another good continuation. This is like almost perfect. So another good one to study. I know some people traded it, some of these trades higher and then even to the downside as well. So pretty solid move to look through, just on your own time as well. Yeah, I can. I try to do it on like the back testing. I can look when I have time. I was just doing that because I was trying to refine out certain things, but yeah, I'll have to see it on other pairs. Yeah, oil, gold. Yeah, I can look into doing that. Which pair do you check divergence? So with euro, I personally think dollar is the most important. GBP is a little bit, it's more relative strength where correlation with dollar is a lot more significant. It's inverse, obviously, but when you find a divergence between dollar and euro, that's a lot more significant in my opinion than euro and GBP. Maybe you'll find that works, but I would just look at dollar. I think that means a lot more. It's kind of like, so the way I view it is dollar and euro, that's like NQ and ES. Euro and GBP is like, GBP is the YM of Forex. That's how I see it. 7 hour time. As long as I understood data you use was from expansion days, the parameters so that you use to classify an expansion day. Did you use the average daily range? Yeah, so I think it might have changed a little bit, but I think we did 250 points total range, maybe up to 300. But then we also used the open to close differential to actually show it held a trend. So let's see, for an example, they're not as common, but a day like this where you have a large wick, it made a large range, but didn't hold the trend. That is not showing an expansion day. So we also measured open to close. I believe we did 150 to 200 points in that range. I forget the exact number because we did it a couple weeks ago, but around those numbers there for NQ to measure an expansion day, anything that and above. 3 expansion days. Yeah, so it's just any 3 continuous expansion days, and I would emphasize this especially when it happens within a single week. That is a little bit more significant. So any 3 expansion days in a current week is going to be a good one to assume the market's going to pause there. Yeah, it's a tough one to say each month. I have to find like an average, but on average, I would take per month. Per week, I range it from 1 to 3. So I would say 8 to 12 in a month is the usual. And win rate is another wild stat. I've had months where it's 90. I've had months where it's in the 30s and 40s. So it's very ranged. And risk to reward, the average for me is usually slightly above 2R. So I'm always demanding at least a 2R trade, but I really like to get more out of it if I think I have it. I know Kiko is collecting some stats on that, which maybe he'll show in some time, and he's still working on it. But keeping some on and letting it continue to go overall is beneficial, especially when you think you've caught on to a good trade. I don't like to cap the upside, so it does push a little bit higher on average. We'll talk about next week. I didn't go over the economic calendar from last week, which is fine. So, I mean, last week was this week? That's this week. Last week, I think, was simple. Yeah, it was just CPI, but you could just go to the recording. Everyone knows what we were looking at. This upcoming week, so this will be the last normal week of December. I know next week is going to be, that's crazy, actually. Oh my God. Yeah, next week's Christmas, obviously. That's going to break up the week right on a Wednesday. So that's going to be a different approach, if anything. But this week is normal. Every single day is trading. So I approach it normally. First thing that sticks out to me is FOMC press conference on Wednesday, high impact news. So I am curious about this, but I haven't collected any data, so I can't give you a defined answer about how the earlier hours of New York trade when this is within the day. I don't know that number, but I do know the day prior has actually no effect at all. So I'm not really worried about that. So trading days would be Monday, Tuesday. For now, post 2:30 FOMC, I always preface this by saying it's usually just a day you should skip. It gets people really riled up because there's a lot of volatility, but usually not very helpful to trade that day. It's difficult. Thursday, fair, good. Friday, good. And then these are all times. 9:45, I usually don't care much about. 8:30, I will be aware of on Tuesday. 8:30 on Thursday, and 8:30 on Friday. These are all relevant enough that I would want to know that they're there, that volatility will enter the market. FOMC, 2:30. Don't touch it after 2 o'clock. 2:30 is the time to wait for if you're actually going to watch the market. Can't say it's going to be in favor, but I'll have to see if I can get any data on the hours before. For this here, Monday, of course, going to let that go. But if I'm looking at this here, I can pretty quickly draw what I should be focused on. You're like staring at this low here. That's going to be a focus. This Monday trader on that. I'm basically looking to see if that divergence at the high is going to be an area to trade away from, or if this low here on ES is going to be something that would offer a move higher. So I'm going to be watching those two things. What does Monday do to develop around these areas here? I'm aware of this move. So I'm basically watching those two things. We almost have, I know that the divergence and the lack in correlation on the daily makes it a bit odd. That's why even more so I like to wait for how Monday trades. So I'm focused on, is this high going to remain relevant? But also, if that high means something, well, let's see how price trades around this low. So this could either act as a draw or something to be relevant to either trade away from. So we'll watch how it develops around those two, and just like usual, usually Tuesday we'll start doing some updates if there's something to point out. Similar with, yeah, I mean, all of these pairs, I don't trade Monday anyway, so. Wow, that is a wild daily time frame. Jeez. Let's see. You pay any attention to Wednesday, the 27th on ES? Is that the up close candle, or is that this here? Yeah, so that's something that could matter. But if it's going to be, like, I could focus on that, but if it's going to be, like, the only reason you would really focus on that is if you were looking short, and I think NQ seems a little bit more clear to be focused on some short framework. So I can note it, but for now, I don't have too much attention on it. But yes, it could become relevant. So I don't know. I would assume if you're asking about fair value gap, maybe it's just this low here. Yeah, it's really just that low. So it's the same low that I highlighted. That's this low here. So like I said, there is potential. It doesn't really give me a solid bias right now when the market opens like this, or when the previous week closed like that. So I don't have a specific bias as of now, but I am noting that as a level that could offer some potential. So yes, in a way. And then for Euro as well. Last week closed really well. So that gave me an idea. Yeah, I still waited for Monday. That doesn't really change. Euro. Jeez. Yeah, no, Euro's going to have to wait a little bit. I would say just keep continuing off of this high, but there's not really a defined level in here right now to say it should trade lower from. So Monday is going to, Monday will matter for this, especially. So yeah, I'll focus on it. So I have the channel in there where I'll update if I see something. Oh, did you say? Oh, Wednesday. Oh, you're the 27th. Oh. This year. Yeah, I mean, I do see that. Yeah, that can kind of play into it as well. If you marked out 50%, generally it's the same thing where if it makes like a manipulation of this low, is we'd want to see it be more shallow anyways, because you want that reaction, which in turn would then look to respect this down close candle. So you can keep it in mind. I think it's fair to say, maybe I'll look at that, but a lot of focus on this low specifically. So yeah, nothing wrong with looking at that. RCL. What is that? Oh, it's a stock. Stocks, I don't know. Just quite yet. It's a different market, so I wouldn't have, I couldn't even give you a good opinion on it. Um, yeah, so the time frames, so the protected swing, it's just like, it's the same way you would view it in the content, where it's either a manipulation or a divergence. It's one of those two. Where you have, like, you could even take my short from, let's see here. It's actually an example of both. So, but the time frame, it depends on what step in the process you are. So, protected swing, when I'm trying to frame a bias or something of that nature, trying to get a direction on the market. This here, I can even go a day back because I shorted this day. Start on NQ. This is the first sign where I see a relevant high. It has to occur at a relevant point. This high means something because we look left, there's nothing else there. Opening a new week. Manipulation. And I can go to ES, and there's actually a lower high. So that's pairing it with another type of protected swing. So a divergence, meaning this high should not be traded back to. So the daily time frame, I could start there. If I want to confirm that protected swing, I could go to an hourly and look for that change in state of delivery. So that's a confirmation time frame here. Great. And I can even look in the continuation as well. And after that protected swing is formed, the rest of it is just looking at either hourly, opposing candles in that way, and just the daily profile and entries. After that, it's just those time frame alignments. So usually they'll go daily, hourly, and then entries are, depending on what time you're trading, 30-minute down to around 5. Yeah, what's 300 points on NQ on ES? I would 300's pretty average. I don't know. I actually don't know the average day on ES. That might be like 60 to 80 on ES. I couldn't give you a direct answer on that. 50 to 80 maybe. If I'm assuming what an average day on ES would be. That might even be pushing it. I don't know. Let's see. I don't really track ES with points in the same way. Yeah, it's probably less on ES. Yeah, I mean 300 points on NQ is probably like more like 40 to 50 to 60. I would have to get data on that to actually know. UGA. What is UJ? I know it's Forex, but what does that stand?
USD JPY.
JPY. It has what too? Yeah, so when you close a week in an expansion like that, not necessarily, it doesn't have the expansion rule because you have these days here. Again, avoiding Monday, especially for this, matters more because you are almost in an area where you can't draw a specific point the market should respect. So when it closes at the high, I let Monday go without me and I'll mark out previous week high. That's my approach most of the time when this happens here. So you're basically looking for something to develop and wanting more context. When something expands, it's just like last week. Indices at all-time highs, expanding into that in the close of the week. I'm just marking out previous week high and letting Monday trade and then going from there. Christmas week, yeah, I'll have to see. I wonder if there's a half day mixed in there, but most likely take the week off. and not even for just a break, but just because trading in those weeks, when it breaks up the week like that, it's tough. Um, no other technicals. No, I mean, anything beyond what's there is like I have no secret that's going on. I think you can always build. That's the thing with experiences that's just uncapped. Like you can, if you're doing the same thing over and over for a long time, the concepts don't really change, but you understand them to a better point. So no, I don't have any. Not that I'm thinking of. I don't have anything. Nothing's being kept secret. I could say. Is AM my initials? No, it's not. Almost. To use the 5 day average daily range. No, I don't usually use the average daily range. You could, if you were looking for a day to make a certain move, and you can look at what the average is, see if it still had room left. You could do that. The videos, I'm going to start doing them towards the end of next week just because I'm traveling. I can't do them now. So I'll start when I get back. How do you frame reversals in New York session? We have drawn open. Yeah, I mean, the New York reversal, like if you're trading that, all time highs doesn't really change much in how you would look for it. It's just you usually are looking to wait. Like, for example, when price at all time highs, I'm more willing to wait to let a day print for that added context. But the way you would approach like a New York reversal, if the daily profile is valid, then it's valid. You don't really have to change how you would approach it completely.
Yeah, so in that case, all they're talking about is because your stop loss would be there, your entry would be up there, if it makes sense.
Oh,
So you can go like,
with an entry like that. Yeah, so when it does that, I don't like to buy it when it breaks away like that. It goes for any really entry. If it happens to be like that, like on that first entry, I see how it kind of wicked above. I would look on a lower time frame, or maybe you can jump one up or one down, and maybe you'll find that close above is a little bit more clear. Just because I see it traded above and then wicked lower, that could be a retest on a lower time frame or a higher. So that's what I would do. But yeah, if it breaks away like that, I rarely will take the buy. If the risk to reward, there's a certain degree to it, but
it's kind of subjective.
yeah, it is a little subjective. I usually like to be around the the entry point, like that close above.
Ninja Trader.
Yeah, Ninja Trader's pretty good.
AMP's API for trading view is crazy though.
What happened?
AMP, their
Amp?
API for trading view like
What?
updates so fast.
Is it? Oh, is it better?
It's crazy.
Yeah, it's a little delay. Yeah, so that you don't want to change the time frame. Like if you don't see the signature, then yeah, don't drop the time frame trying to find it. But if you see something like that, like when I noticed the wick, that wouldn't necessarily be forced. Like if that was a 15 minute, maybe you'll find out on a 5. That's something you can do.
And I mean, another thing you can do is if you're already anticipating that low, you can use a candle 2 or a candle 3 closure entry, but it's just less confirmation.
Right.
For,
Yeah, there's definitely ways.
yeah. Little donkey.
probably gonna end the recording here because, yeah, just to make sure it's saved.